Well, it's been a really long-term hold. I own it not just because of this, what we've been dealing with over the last couple of years, Frank. It's just, I think it's a really quality company. When you look at their free cash flow, you look at all the different things in their balance sheet, and Steph can speak to that as well. It's just an absolute home run. But obviously, given the circumstances that we are dealing with right now and what they've been able to come up with, I think this is huge. And if you go back and you look at the end of November into December, we have had nothing but unusual option activity looking for more upside, including just yesterday where they were buying 62 strike calls. They continue to come after this stock in a positive way, and it's been moving to the upside. Joe pointed out a lot of the different things that make a lot of sense as far as what they're going to be able to do and how they're going to be able to do it. But the other thing is this. They need to be able to produce even more and more and more. And I think that's something they obviously will work very hard on to try to diligently get themselves into a position to even put more out there for people. But this combined with everything else that Pfizer brings to the table, I think is exactly why I was looking when they asked us about, hey, second half of the year, what are you looking at? Healthcare. That was exactly the area that I focused on because I felt like as we were going through this pandemic, we're going to have some ups and downs. We're going to have different variants along the way, of course. And that's why I think the healthcare industry has a lot of room to the upside. And take a look at what Pfizer has done over the last few months. It's been a very explosive move for a stock that normally does not make these kind of moves. And a lot more option activity has been flowing into this name as well. I'm going to hold on to this name. It's not overpriced just because it's gone up as much as it has. I think this is one of these names that absolutely has a lot more room to the upside.
So, Pete, very bullish on Pfizer, but you actually just sold J&J.
Yeah. I did. And here's my rationale there. So I own Merck, I own Pfizer, I own J&J. The reason I sold J&J has nothing to do with the fact that J&J, it does fine. Its performance, however, is very lackluster. And within that performance being so lackluster, it's also very, very tight range. And because of that, as you guys all know, when I own stocks, I always sell calls against my stocks. J&J has been a very difficult stock to be able to sell options against because, quite frankly, the implied volatility there is even lower than where we are looking at it on the VIX. We're talking about, well, at least it was, about a 20 implied volatility. I'm getting close to a 40 implied volatility every single week that I sell against Pfizer. I'm getting about a 35 implied volatility in Merck. I'm not getting that here, so I'm not getting performance from the stock, and I can't get the performance that I'd like to get with the options. So I determined why not sell this stock now, and then I'll focus on some other stocks in the future.
So, Sarat, turn it over to you. You're also in on healthcare. You own Merck. You also own J&J, and you actually disagree with Pete.
I do, but I mean, Pete and I are looking at different directions. I'm not looking at volatility. I'm looking at a core holding of a stock that could be the calm in a volatile period going forward. We actually believe if you break up J&J, and they are going to be breaking up into two different groups, two different companies, the upside in J&J is, look, you're going to get 7 to 8% earnings growth and a 2 to 3% dividend. I will take that any day on a low volatility, as Pete said, and a company that I think has so many things in it right now that because of COVID, you haven't seen any of the upside in the orthopedics division. There are a lot of other drugs that really haven't come out because people are very focused, especially in hospitals and doctors. So it is a very good company. It's a very strong balance sheet. It's a growing dividend, and I like that one. And then the other one I also like in there, which you didn't mention, is Bristol. Bristol's trading at 8 times earnings.
You're not the only one.
So I think healthcare, to Joe's point and Pete's point, is I want to be in healthcare, and these are some of the companies that I want to own. They haven't done well, and I think they've got a lot of promise for the future.
Sarat, sorry to cut you off. I was going to say, you're not the only one. Stephanie, you actually just bought Bristol Myers.
Yeah, and for that very reason, it's flat year to date. It trades at 8.3 times earnings. It gets you a 3.5% dividend yield. They just increased the buyback by $15 billion. That's 12% of their market cap. They have an okay pipeline, Frank. I'm not going to try and sell you on it, but I do think there still are some cell gene synergies that are underappreciated, and we're going to get a lot of approvals in the beginning of 2022. So I like it because I think the risk reward is really appealing, and I like the valuation and the dividend yield. And on J&J, by the way, I understand why Pete's selling it. I own it. I love the fact that they're separating the company up. It's going to take some time, but they have a great pharmaceutical franchise that I think is so underappreciated. And they recently had an analyst day, and they're talking about a 5% CAGR for the next 5 years in their pharma business. They have 14 mid to late cycle assets worth, they think, over time, $1 billion each. So I think it's underappreciated. Yeah, it's kind of boring, but I kind of like some boring to offset some of my cyclical exposure too.
All right, switching gears a bit. We're going to turn
And Frank,
Oh, go ahead, Sarat. Sorry to cut you off.
I just want to add to what Stephanie's saying. So when you're an investor, the time to get into a Bristol and a J&J is when nobody really wants it. And a lot of the money's flowing into some of the hotter stocks. So if you're patient and you're getting a good dividend and a strong balance sheet, this is kind of where you make the money. And it might not be the next quarter, but, and if I'm not speaking for Stephanie, but I'm looking, a year to 2 years out, where you get any type of multiple expansion and you get any of these drugs that actually hit, you're going to do well.